Welcome back. Chipotle seeing strong sales growth so far this year as customers are shaking off higher prices, but inflation certainly not going away. Joining us now, Chipotle CFO Jack Hartung. Jack, it's great to have you on the program. Thank you so much for being here. We heard from McDonald's. They're struggling a little bit. That consumer is starting to tighten up, but Chipotle is still seeing its consumer spending despite price hikes that we've seen. Talk to me a little bit about the elasticity in your particular consumer and why you expect that to be sustainable.
Yeah, we had a great first quarter. We had a 7% comp, and more than 5% of that was driven by transaction growth, which I know is tough to come by, in this kind of environment. The thing we're most proud of, when we look at our customers by income brackets, our low-income consumers came at the same rate as our high-income consumers. And that tells us that we're really providing a great value and we're charging a fair price for it. We know that consumers, especially on the low end, are inflation wary these days. And so we've been very careful about not trying to get a little overzealous with price increases. In fact, we're running under a 3% price increase during the first quarter. We think that combined with our restaurant team providing a great experience keeps our customers coming back.
Are you seeing the same in California, even with those price increases there due to the higher minimum wage?
Yeah, the minimum wage, higher minimum wage just took effect earlier this month, so it wasn't part of our reporting period. We did take a modest price increase of 6 to 7%. We've been watching the traffic since we took the price increase. We're not seeing anything yet. We're not seeing any change in behavior yet. It's very early, so we'll keep a close eye on it.
Jack, I understand you're partnering with a company called Hyphen to create robots that can help build meals for you. Now, I don't like that because I like to sweet talk the person making my burrito so they'll give me more chicken. I don't know if I can do that with the robot, but is that the future and how soon is it coming?
Yeah, well, so first of all, you won't see robots at the front line. So if you want to come in and sweet talk and try to get a little extra rice, a little extra ingredients along the way, you'll still have that opportunity. What we're talking about is really for our digital business. Our digital business is done on a completely separate line today. It's about 38% of our business, and it can be very, very busy during our peak lunch and our peak dinner. And so, you can see on the screen here that what we're trying to do is we're not going to replace employees, but we're going to make the jobs of our employees much easier. It'll be a calmer experience. And then we know that we can give our customers who order digitally an accurate order because the robots are going to put exactly the right ingredients in, and we can make sure those orders are always done on time as well. So we think it's going to make the customer experience and the crew experience better, and you'll still be able to sweet talk our crew along the line.
Good.
I want to talk about that crew a little bit as well. You've talked a lot and highlighted about employee retention. One of the ways in which you're doing that is a stock split. We know it doesn't actually create any new economic value, but it does give employees the sense that a stock is more affordable, maybe helps them buy in literally into the company. Is that a reason for a stock split?
Definitely a reason. When we consider this, and we've looked at a stock split for really a number of years as our stock continued to increase over the years, and there are two reasons that we said now is the time to do it. One was for employees, and it's not just so our employees can afford to buy the shares or buy more shares at a lower price. It's also because we give stock equity grants to all the way down to our restaurant managers, and it's hard to get the right denomination considering what level they're at, what kind of performance they have. When your choice is either 0, 3,000, 6,000, increments of $3,000. So having a split will allow us to get the right calibration for our folks to reward them. And then secondly, there is a liquidity benefit. There's this thing called SMAs, which we discovered recently, separately managed accounts, it's a lot of very, very small accounts that add up to over $2 trillion, and it's the fastest growing investment segment. And so there's a liquidity benefit as well. But first and foremost, it was to take care of our employees.
Jack, we so appreciate your time today. Thank you for being here.
Thanks for having me.